Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I want to talk about a subject which is, from my point of view, extremely important, and let's admit it, it could be very confusing for many traders. I'm talking about trading with the news. Okay, what to do when news are released, before the news are released, when they are about to be released, and what news really we should be paying attention to, and could we really predict and rely on that every single time. So this subject is again very important. There are so many news, and most traders simply kind of feel some sort of discomfort or lose their confidence when it comes to news. Should we cash out? Should I enter a trade before? Should I trade after? Etc. etc. There are so many things to talk about here. So let's start. To present it, I will take one trade directly from Traders Academy Club. But before that, if you are new to this channel, first of all, I would like to welcome you to our great community. Please subscribe to the channel. Just follow the subscribe button below this video, and please remember to enable the notifications. As well, I would like to invite you to join our family and our trading club, Traders Academy Club. The link to that could be found below this video in the description, or inside the comment section there is a pinned comment, so you can find the relevant links as well there. So let's take a look on this trading report. That's the trading reports that Traders Academy Club members receive. Okay, and I want to scroll down all the way to our watch list and to show you one of the trades we were talking about in the academy, and this is the pound dollar. Okay, so long story short, as per the analysis, we found a triple cycle on a daily time frame, a pretty important zone from the higher time frame and from bigger swings, which, as we can see, was failed to hold at the first visit. Bearish divergence on the moving average of the MACD. A pretty strong key level 135 area, the round psychological number. So the idea is we expect corrections. And when we are looking at the 4-hour chart, what we see there is that we got two false breakouts. One of the false breakouts was right here on the ongoing trend. Okay, fake breakout, fake attempt to create the highs, and another one was with this area, the highs area. We have beautiful divergence all around. Also on the RSI, we can see clear divergence. So the idea we want to see is a possible trend change, and then we expect correction. That's what we got here. We start to see lower lows created on the chart. We can see that the momentum is gained also here with the MACD creating the convergence. So the way we work with that, we expect to go back to the middle, the 50% retrace, and back to the rejection zone. From here, the expectation is to see further continuation down. And in that case, we expected correction. Correction is normally coming in ABCD pattern or a range. Okay, so that's how we are looking to work with that. And here is the pound dollar. We got back to the rejection zone, slightly higher. We can see it failed to hold above, retraces immediately down and making the expected ABCD. And here comes the big question. All that was right here before the weekend and before the Brexit talks. Okay, so there was no specific data release or a scheduled data release, but there was another meeting and another discussion about the Brexit. Yes to the agreement between the UK and Eurozone, no to the agreement, what of the conditions to agree on, what not. There are so many rumors and so much speculation going all around. So the biggest question we had is, okay, what do we do in that case? So I want, first of all, before we answer that, I want to talk about general thing. What are the news and why they are important? News could be anything. It could start from tweets of the leaders. You know, on the last 4 years, tweets became very popular um, among the leaders, or it could be some social media or some other sources that simply leak some rumors, speculations, or reliable information. News could be official, scheduled data to be released, like non-farm payrolls or like other important data like GDP, like the cash rates, interest rate, or some PPI, or etc., 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 right? The manufacturing data. So all these sort of news definitely have the impact. Some more important, some less important. So how to deal with that? Now, first of all, why news really affect the market? Simply because following the news, right? According to the news, the longer term expectations start to go in the market. So let's say there is a cash rate decision and there was a hike or a cut, whatever, and the traders and investors instantly start to try to predict, okay, so how is it going to affect on the longer run? And based on that, they start to build their positions. Okay, options, calls and puts, futures, etc., etc., all starts to be coming in. All this money flow, all the based on the data, starts to go in the market. Okay, so that's what makes the market really move. Now, you might know it already. The news affect most of all on the short term, because I want you to understand the one thing here, how it looks like. Okay, take a look on a weekly chart. Imagine how much money went through the market to create these sort of moves, these sort of swing highs and lows. Okay, a lot of money flow. Now go to the daily. Would you agree with me that on this part, what you see on the screen, there was less money involved? On the 4 hour, it was even less money involved, right? On the 1 hour, even less. On the 15 minutes, it's much, much, much less money involved. Now, I'm not talking about trillions and few bucks. I'm talking about huge amounts anyway. But the bigger the swings, the bigger the trends, the more money is involved to create them. For the longer run, of course. Money could be in and out, but behind this in and out, there's a lot of very big numbers. Okay, so when we have this understanding, we understand that the lower the time frame, the stronger the noise might be. So when you are about to deal with short-term trades, right before the news, I want you always to have this in mind. News could be something that could be like boosting up your profits, because if you attack in the right direction right before the news and the news really boosts the market, you are going to be very happy trader. If the news will not go as you expected, then it could be hard. Now, a very important thing to understand here as well, in real market, there is no such thing a guaranteed stop loss. For example, if you go sell here and you put your stop loss here, but the market opens up with the gap, there was no price where you asked. So your trade would be closed on the very first price and the very first quote available next to the area, the closest possible to the zone you asked, and your trade would be cashed out. If anyone guarantees you a stop loss on the point, you know this is not a real market. Okay, because if there is no such price in the market, then how a trade could be closed or not closed? Be careful with such promises. So then you understand, okay, so news could boost you up or could make you really regret of taking an action. Then how to work with that? So I can tell only what I do personally, because I want you to understand a very important thing. There is no such thing right and wrong. Okay, there is such thing works or not. So in order to know what something works for you, you need to do it enough time, track record it, and understand, okay, does it make sense for me to take such risk or not? But if you try one time to go with the news and it works and the other 2 times it fails, that's not enough to make a conclusion. Can you really make profit out of dealing with the news? If you are one of those who suffer emotionally and psychologically from being involved before the news, then simply avoid trading before the news. Trade after, with the sentiment, with the momentum, or with the next setup to form. I want you to remember a very important thing: there is always tomorrow when it comes to trading. Okay? If you didn't find any setup today, that you might find one tomorrow. So when you deal with the short term, it's extremely important you first of all always use protections, because you don't normally on the short term you want the quick action, right? And you don't want to be exposed to possible gaps. So data that is scheduled to be released is in the majority of cases not data that really creates some dramatic move. Of course, there are surprises and cash rates could be surprising, or job data could be super surprising, but it's rare. Okay, it's not like there are analysts, there are a group of analysts who create a forecast, creates the consensus, etc., etc. So it's really not that common that the news are way different, like extremely different numbers from what was predicted. It's important to understand that. Okay, so yes, you would see some unexpected moves, of course, but it's not like it's going to happen on a daily basis. So that's about the scheduled news data to be released. It's important to understand it. My personal suggestion is, if I am in the trade and I have a good enough space with good enough profit to protect, I will go, and I have no signs, of course, against me, I will go risk-free. Okay, worst case, I don't make money. Good case, it will boost and let me go. If I'm waiting for the setup and it's about to build up right before the news, then I simply don't attack it until the news. I can drop a pending order on a specific level to get triggered if I'm interested, but I'm not going to get involved into something before I really see the output of the news. If we are dealing with and again, I'm not saying this is the right or the only way, because there is no such thing right and wrong. Okay, there is working or not working for some specific trader, and you cannot get this information by doing 2 or 3 trades. Okay, this is a fact. You need enough data to see, does it make sense for you to deal with it or not. For example, years ago I was working with dollar-yen on non-farm payrolls. It was my favorite. I had a specific strategy that I was doing and it was working. Okay, since all the market, or the job market, was kind of improving and reached some stable static numbers, the dollar-yen doesn't really react to such numbers dramatically anymore, and the moves are normally zigzagging back and forth. So I step back. When I see it doesn't make sense, why would I waste my time and my effort? Okay, when the market is when the news are stable. So again, it's all about trying and experiencing and seeing what works for you and what not. Now I want to talk about the longer term effects. When you watching on a longer term news, then you always need to keep that in mind, that the small data that is released during the weeks, again, as I said before, most of the times would not affect anything. Okay, it will be some noise and the market would stabilize itself right afterwards. But what is important here is important data, like the Brexit, for example. Yes agreement or no agreement, this could be a trend change, not a noise, not a good local market or some manufacturing, etc., or housing starts in a specific month. The trend is what important, right? How it's been going on the last several data releases. That's where the real numbers are. So what when I am looking for the long term, I want to pay attention to significant data. Cash rates extremely important, right? Especially when there is expectation for some serious action. Brexit talks, political changes, etc., etc., all that could change trends, not just cause some noise, change trends. So my point of view here is, if you are involved in trade, like the pound dollar, which I showed you before, the one that we discussed in Traders Academy Club. Okay, so we expect a correction, we got a correction, and then we are facing a bullish divergence. Now, my personal belief is, if I rely on the chart, on the price and the chart to bring me in the trade, I would also rely on that to take me out of the trade. And here is what I want you to understand. So in that case, cash out or not cash out, because if the news come bad, right, we should see here a huge crash. But if the news are not really bad, we will see a retrace and to the upside. So what's the right action to do here? There is no such thing, only one right action. As I said, for me, once I see the signs against, in that case the bullish divergence I am showing right now, then I am out. And out, it means out of exposure, out of risk. That could be by cashing out, partial or full, and that could be just risk-free. But I am out of risk. That's what I'm saying. Out of risk. Now, okay, when to cash out? So my personal approach here is very simple. You are in trading business to make money. Meaning, you need to make money. So if you have a trade that pays you, you always have this decision to make. Should I get out and take the money or let it go, right? For me, what matters is, of course, following all the rules and of your trading strategy and trading techniques. But what I want you to understand here is the idea is always total performance, at least from my point of view, which means I need to make money. So if I had a fantastic month and now I am in a position where I have a good profit, but I don't want to cash out, I don't need any more specific profits, I can go risk-free. And I don't lose money. I made my target, I reached my target. It could be 5%, 10%, 20%, doesn't matter. Of the month, of the week, of the quarter, of the half year, doesn't matter, right? But if everything is going well for you and you have a trade that you can get boosted by holding, or right? So you just go risk-free, right? Moving stop loss to entry. Worst case, you don't make money. That's all. Best case, if it really moves fast in the direction you need, you will just boosting up your profits. Alternatively, if your performance is somewhere around break even or little loss, and then you got a very strong trade that paid you, and then huge dramatic news are going to be published, then make the money. You're in this business not to be right and not to make impression of how well you draw lines. You're in this business to make money. So if you got this money and you're exposed to some significant moves that could affect it, why would you risk your money earned? So that's my point of view, total performance, how your performance looks like, and will you improve your balance and your performance by cashing out before this dramatic news or not? Okay, and the main thing which I want you to remember, again, from my point of view, of course you can agree or disagree with me, and by the way, let me know, how do you see this subject? Okay, do you think what I said makes sense to you, or you have better suggestions to the followers? Please share your view in the comments, and let's see how you treat and how do you view all these things about trading the news. Maybe you have some better suggestions than I do. I will be more than happy to hear. So please leave your feedback and your comment in the comment section. Let me know. Let us know, the viewers, what do you think about that. So from my point of view, there is no right or wrong or absolute do or undo when it comes to news trading, and every specific situation could be also, of course, examined by itself. Okay, the only thing I really suggest is don't make conclusions out of one trade, two trades, or even 5 trades. That's definitely not enough. Okay, because I mean you can't rely on and make conclusions on something that doesn't have enough evidences, enough facts. So that's what I wanted to talk about, and I hope that is a help to you in your trading. Let me know again what you think about it. If you enjoy such videos and the content I have for you here in the channel, please show your support back, hit the like button. YouTube algorithm requires that things to keep the channel going and get its publicity, so feel free to share this video with anyone you want. The idea here is to be helpful to traders, and once again, thank you for your time watching this video. I hope it is helpful for you, and I would like to invite you to our Traders Academy Club, where you would be learning in real time all our techniques, trading techniques, if it's for analysis, if it's for setups to trade the analyzed instrument. The links could be found below in the description or in the pinned comment inside the comment section. Thank you very much for your time watching this video. I hope it was helpful, and you found a benefit out of this video, and I'll see you soon with more ideas, more content, and more value.